Welcome back. A couple of mid-caps are actually doing quite well. We have Escorts, Kubota. Remember, this year has been quite a year for the stock. It's up almost, 42% in the last 12 months or so. But in recent past itself, we've seen a big move on Escorts. Crompton is the other one, and Voltas is the other one, which is spiking from the lows of today's trading session. So mid-caps generally are outperforming the frontline indices. But one of the stocks on our radar is JSPL after the company has cleared its overseas debt repayment. They've repaid almost $1.8 billion, which were due in over the last 4 years. To discuss this and more, we are joined by the JSPL CFO, Ramkumar Ramaswamy. Ram, thank you for joining in. You had promised to be debt-free by September 2022 back in our last conversation. Just wanted to understand that with this payment, are you entirely debt-free? What does the consolidated debt on your books stand at, if at all, if there is any?
Yes, thank you, and good morning to you as well. We had around $1.8 billion of overseas debt. We have brought that down to almost zero. As far as the domestic debt is concerned, the last quarter, we had reported a net debt of around 7,700 crores. Our journey of deleveraging will continue. As we have stated, we would like to be very, very conservative in terms of our debt and operate at a gearing of less than 1.5x through the cycles. So I think this will be an ongoing journey as we speak.
Okay, so currently your domestic debt is around 7,000 crore rupees. That is as on quarter 2 or that is the quarter 1 number?
That was the quarter 1 number, 7,700 crores.
So what is the outlook on your domestic debt now?
As I said, we are on a continuous journey of deleveraging. I will not be able to share very specific numbers, but that's the journey that we're on.
So this is rupee debt, right, Ram?
The rupee debt, that's right.
There's no dollar debt now?
That's right.
No dollar debt, $0 debt?
That's right. All our overseas debt we've fully paid off now.
Okay. And, okay. I mean, I was just getting to the foreign exchange part of it. A large dollar debt usually at times like this causes a fair bit of pain, but that's not a problem in your case now.
Yes.
Ram, but in terms of any timeline or overall guidance on what you plan to do with the local debt or earlier repayment, would you like to leave us with something, a broad ballpark idea?
See, I think what I would like to restate is we would like to be very, very conservative from a debt perspective, and we want to operate at less than 1.5x through the cycles. Yeah. I think that's the journey that we will be on as we speak. There aren't any specific timelines or guidances that I would like to share at this point of time.
Right. We take that point. Just wanted to understand that with the debt that you've repaid right now, the overseas debt, etc., and you want to be conservative, as you pointed out, you had a massive capex plan as well going forward. I just wanted to understand, how will that be funded? That's point number one. And secondly, with the correction that we've seen in steel prices, are you looking to push that capex plan forward, maybe postpone it for now?
Sure. The entire capex is being incurred in our wholly owned subsidiary, Jindal Steel Orissa. Yeah. The current we are of course going to be funding it through a mix of debt and internal accruals. As we speak now, our priority is to ensure that we complete these projects on time and within budget. Yeah. And we will, of course, be constantly watching the horizon in terms of our overall gearing at Jindal Steel and also at a consolidated level to make sure that we operate on a very, very conservative basis.
So what would your capex amount be? And since we are talking about you continuing with those capex plans, will you be taking more debt in the domestic market?
As I said, that capex is being incurred in a wholly owned subsidiary, Jindal Steel Orissa. And that's going to be funded through a mix of internal accruals and long-term debt as well. We have already signed up for long-term debt for this with some of very reputed banks.
If you can give us that amount, Mr. Ramaswamy, what is the amount for the debt? We're just trying to figure out what would your debt number look like.
Sure. I think the term sheets that we had signed up for was close to around 15,000 crores.
15,000 crore of debt being in your wholly owned subsidiary would still mean that on a consolidated basis, you will have debt on your books, right?
Of course. Jindal Steel and Power, as a listed company, will be moving towards a continuous journey of deleveraging. And the capex plans will be through Jindal Steel Orissa, where we will have this 15,000 crore of debt as we speak. Yeah, that's right, which we've signed for.
Be that as it may, wanted to understand that now that you've cleared the debt of your overseas assets, etc., is there any way you're also looking to clear some of those overseas assets themselves, maybe get some more liquidity out for yourself, maybe some of the assets on the block?
See, we will be constantly evaluating options and opportunities in terms of capital allocation. And as we speak, there are opportunities that we continue to evaluate. If we think there is a good opportunity, which is going to be value accretive, then we will definitely look at those options.
Could you be a little more specific, Ram? I mean, what are these opportunities, which geographies?
See, I would not be able to share more specific details on this at this point of time.
Okay. Ram, just give us an idea, again, very broadly without getting into numbers or anything. What will net realizations, or rather what have net realizations in the second quarter been like? I mean, the expectation out there is that compared to the first quarter, they'll be about 8 to 10% lower. So what is that number broadly going to look like? Are these estimates correct in the ballpark? And will this quarter also mark some sort of a low there in terms of realizations? And things are looking up Q3 onwards. What's the expectation? Yeah.
Second, I have to be very, very careful in some of these numbers.
Sure.
Because I think we are nearing our quarter end. I think what I can definitely tell you is our overall realizations during the quarter have been lower than the last quarter. Yeah. This is, of course, available in the public domain in terms of the entire industry itself. So I think our story is also pretty similar to that. Yeah. But I can't give you very, very specific numbers. I think the outlook is definitely improving. That much again I can say. But you will have to pardon me for not being more specific on this.
Outlook in terms of pricing has improved, or demand scenario has improved?
Demand scenario is also looking strong. Our pricing is also looking up over what it was over the last few months. Yeah.
Okay. Mr. Ramaswamy, I wanted to understand if you've heard anything on export duty, the removal. Is there any expectation from the industry? It's an industry-wide question, so no numbers here clearly. What are you hearing here?
I think we are all hearing the same news that is there in the public domain. I don't have any other internal news. We are also looking at this very, very closely to see how this plays out. Of course, with the export duty going out, I mean, whenever it does, I think the entire export opportunity that is available for us will once again, we will be able to really realize the benefits of that. Yeah.
So,
we are also watching this space very, very closely.
Okay, so we'll be watching that space closely. And just you said qualitatively the second quarter realizations were lower than the first quarter. Would you be able to tell us, was it 5%, 6%, 7%, 10%, a little more? I mean, just a ballpark range if you must. Not particularly for you, but for the industry.
Sure. See, I think again, given that we are almost on the verge of quarter close, it will not be fair for me to give any more specific numbers at this point in time.
And EBITDA per ton, will that be lower than the first quarter?
Again, I'll give you a sense of what it is. Our realizations have been are of course lower. Our costs, most of our raw materials are bought 3 months ahead, right? Our coking coal, etc. So we would be sitting on slightly higher cost raw materials, and therefore our EBITDA per ton would be lower this quarter versus the last one. Yeah. Right. But I can't give any more specific numbers.
No, we don't want you to be specific at all. But thank you so much for taking out the time, being with us here on the program. Really appreciate it, and congratulations on that winding down of the Australian debt. And look forward to speaking with you again at the end of the quarter. Thank you indeed. All right, we'll take a quick commercial break here, and we'll come back. We'll focus on the chemical space when we come back on the other side. The market, by the way, has given up a little bit more. It's up just 65 points now, 16,922. So chemicals is the sort of topic next on radar in just a bit.